Yes. So this is a teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. We are solving MCQs paper of 9706 February March 2025, and we are done with 18 MCQs. And now this is part 2, because I just want to have you relaxed so that you can do the next 10, 11 MCQs, which includes absorption and margin in the next class. So we are doing 19 MCQs in the last 1 minute. A company statement of financial position including the following: bank debit balance 3 lakh, ordinary share capital 10 lakh, share premium, revaluation reserve, general reserve, retained earnings. What is the maximum total dividend that the director can propose? Remember that the maximum total dividend that the director can pay is 3 lakh. So A is the answer. But that is the maximum total dividend the director can pay, because we have only 3 lakh in the bank. But what is the maximum total dividend the director can propose for the next year? That is all the revenue reserves, because the revenue reserves are used to pay dividend. That is general reserves 1 lakh and retained earnings 4 lakh becomes 5 lakh. So C is the answer, 5 lakh, because that dividend paid, the maximum dividend paid is 3 lakh, no doubt. But the maximum dividend which we can propose out of our revenue reserves is the total amount of revenue reserves, including general reserve and retained earnings, that is 5 lakh. So the total dividend that the director can propose to be paid, recommended to be paid in the next year, that is going to be 5 lakh, and that will not be recorded in the books because proposed dividend won't be recorded. It is just be written as a footnote. So 19, the answer is C, not A, C answer. Sunil was reviewing the statement of financial position of a business. The statement of profit and loss was not available. Why was Sunil interested in the current asset of the business? So he is just looking for the statement of financial position, and why he is interested in the current asset: to assess its future prospects, to be able to calculate efficiency ratio, to discover if it is profitable. Profitability can be judged only by statement of profit and loss, which is not prepared. Assess its future prospect can be seen through proper balance sheet. Efficiency ratios basically is also related to profit, to see if it is able to pay debt as they fall due. So D is the answer, because current asset is basically, it is the ability of the business to pay its current obligations. So if he is interested in current asset, means that he wants to see if the business is able to pay its debt when they fall due, the current debt, as soon as they arrive. So D is the answer. What is not a limitation of accounting information? It can be compared with other years. It ignores non-financial factors. It ignores seasonality of trading. It is based on historic data, right? So all three are the limitation of accounting ratios or accounting information, B, C, and D. A is the answer, because accounting information can be compared. It is the advantage of accounting that the results can be compared with the previous year, with the similar business, or with the industry average. So A is not a limitation. It is the benefit of accounting information. But non-financial factors we do ignore. We just talk about numeric, and we talk about historic data. It talks about the past. And seasonality we never take into account. We just take the full year, 1 year. After 1 year, we used to take the prepare financial statements, right? But sometimes we have a good season, sometimes we don't have a good season. So it depends. So A is the answer. Accounting year of a company ends on 31st December. At the end of year 1, the company was financed by equity of 8,50,000, and there were no long-term borrowings. So it means that 8,50,000 is basically shareholder fund. It is the equity, because no non-current liability. But at the beginning of year 2, a 6% debenture of 1,50,000 was issued. So now the equity and liability section has become 8,50,000 equity and 1,50,000 debenture, which is a non-current liability for year 2. Profit for the year 2 was 58,000 and dividend of 20,000 were paid. What was the return on capital employed for year 2? So let's calculate. Remember that return on capital employed, the formula is operating profit from operation over capital employed into 100. So the profit for the year 2, the profit from operation is 58,000. No, dividend will not be subtracted, because we need profit from operation before interest. That is, this profit for year 2 is after interest. Even we have to add interest into this. 1,50,000 into 6%, that is 9,000. So 58,000 plus 9,000, we will get the profit from operation, which is going to be how much? 67,000. Okay. So 67,000 profit from operation divided by capital employed, that is equity plus non-current liability, that is 8,50,000 plus 1,50,000 and multiply by 100. That is the return on capital employed ratio for year 2. So let's calculate that. That is going to be 8,50,000 plus 1,50,000 is basically 10 lakh. So 67,000 divided by 10 lakh into 100. That is going to be 9 lakh, 8,50,000 plus 1,50,000. Profit for the year 2 is 58,000 and dividend of 20,000 were paid. So dividend are supposed to be subtracted from the retained earnings. So dividend will not come. Obviously, dividend will not be a part of the question. Let me calculate it again. 8,50,000 is the equity. No long-term borrowings were there at that time. Okay, 6% debentures were issued. Of 1,50,000 was issued. Okay. 8,50,000 plus 1,50,000, that is 10 lakh. Profit for the year 2 is 58,000 into 0.06. 9,000 ही आ रहा है. 58,000 plus 9,000, that is 67,000. Okay. So capital employed is capital plus non-current liability. So equity we have at the beginning of the year 2. Oh, at the beginning of the year 2, 6% debenture of 1,50,000 was issued. That's fine. Okay. And profit for the year 2 was 58,000. It means that 58,000 we have paid debenture interest of 6%, and we need profit from operation, which is 67,000 into 10 lakh into 100. So that is going to be 6.7%, but the answer is not there. So let me calculate it for you.
सर निकला
अच्छा जी, तो देखते हैं जिसको हम, ये थोड़ा टेक्निकल था, इसको हम फिर से देखते हैं. देखें आपका जो इस वक्त प्रॉफिट है, that is going to be 67,000. That is quite fine. Why? Because our profit for the year 2 is 58,000. 1,50,000 into 60%. Debenture interest is 9,000. We will add debenture interest into profit. 67,000 is going to be the profit before interest, for which we have to find. And then we have to divide it by capital employed. So capital employed is going to be non-current liability, 1,50,000 plus equity. Now we have to calculate equity. Why? Because the equity which is given, that is the equity at the end of first year. We need to find the equity at the end of year 2, because we are finding return on capital employed ratio for year 2. 8,50,000 is the equity amount of equity, but that is at the end of year 1. For year 2, the equity section will increase by 58,000 of profit, and the dividend have been paid through equity out of retained earning or reserve, whatever. 20,000 will be subtracted, and then the equity is going to be for year 2 is going to be 8,88,000. So I will add here 8,88,000, and now it will multiply with 100. The answer is going to be 6.45%. So this is C is going to be the answer. Why? Because operating profit is 67,000 before interest divided by equity plus non-current liability. Non-current liability is 1,50,000 for year 2, but equity is not 8,50,000. Equity we need to calculate for year 2. That is 8,50,000 plus 58,000 profit for the year minus dividend 20,000. Then we'll get the equity at the end of year 2. That is 8,88,000. 6.45% is going to be the answer. C is the answer. On 1st March, a business had an inventory of 3 items which had cost $8 each. The business uses the first out method of valuing inventory. During March, the following transaction occurred. What was the value of inventory at the end of March? So let's calculate the value of inventory at the end of March. That is March 10, we have purchased 16 units at 7, 14 units at 6, and 27, we have issued 24 units at 10. Because first in, first out, 16 plus 24, it will 30. 30 minus 24, which has been issued, the remaining units are 6. 6 units are remaining. That is the closing inventory, but in units. But the per unit cost, with which we will multiply this, that is first in, first out. Ye 16 already has been issued on March 10. Out of 14, again, 8 has been issued, 6 has been remaining at the rate of $6. So 6 into 6. So the answer is going to be 36. The value of the ending inventory at the end of March is 36. A is the answer because of the first in, first out method. Next, a factory produces 1100 units per day. Daily machine setup cost are 2000. Direct material cost per unit is $3. Machine operators are paid $400 per day. Each can produce a maximum of 200 units per day. What is the average cost per unit? So let's calculate that. This average cost per unit is normally coming very often in the exam, but it has also become a little easier. Otherwise, this MCQs 24 is always very difficult. If you go in the past papers, you will find this MCQs as 22nd MCQs. You will find the same MCQs as 22nd MCQs. Remember this. So let's move forward. How we'll do that? 1100 units per day. Material cost is 1100 into 3 because direct material per unit is 3300. Then we have machine setup cost of 2000, which is a fixed cost. It will also be added because we need to find the average cost per unit. It will be added also. Okay. Next. Machine operators are paid 400 per day and each can produce a maximum of 200 units per day. So it means that for 1000 units, we need how many operators? If each operator produce 200 units, 5 operators. But as we are going to produce 1100 units, we need a 6 operator also. So 200 units by 1 operator, 200, see 200 plus 200 plus 200 plus 200 plus 200. 5 operators are already done. 1, 2, 3, 4, 5 operators have to be because they produce 200 units each and they will charge us $400 per day. That is 2000. But 100 units we need more. So we have to hire another 1 operator at a cost of 400 to produce 1100 units, and that will become 2400. So the direct labor cost is going to be 2400 and the total cost is going to be how much? If you can calculate. Anyone? 3300 plus 2000 plus 2400, that is 7700. Divided by 1100, which is the unit. So average cost per unit is 7. So D is the answer. 7 is going to be the answer for this 24 MCQs. That average cost per unit is 7. Direct material is 3300. Direct labor is 2400, which is paid to machine operators. And 2000 is the machine setup cost, which is a fixed cost. Divided by 1100 units, 7 per unit. What is the average cost per unit? If you find this MCQ is difficult, please solve every MCQs of every paper from 2018 onwards. One MCQ of every paper, you will find it at 22, number 22, regarding the labor. A business uses absorption costing. Which cost will be charged to production? Absorption costing takes all production costs into account. So all production costs will be taken into account, includes direct material, direct labor, variable overheads, and fixed overheads. Because marginal costing includes direct material and direct labor only, or direct material, direct labor, and variable overheads only. And direct material, direct labor, and fixed overheads comes, but variable overheads will also be part of the charge to production. So A is the answer: direct material, direct labor, variable overhead, and fixed overheads. All cost 26. The following data applies to a business. Budgeted direct labor are 20,000. Budgeted overheads 3 lakh. Actual direct labor hours 19,000 and under absorption of overhead is 35,000. What were the actual overheads for the period? Let me calculate it for you to make it easier, because you know that the MCQs of costing is always a little bit more difficult than the MCQs for the financial accounting. That's why I have gone for another lecture for the particular. We don't know the actual overheads, but we know that absorbed overheads are going to be actual hours into OAR. So let's see. Actual hour, direct labor hours are 19,000 and OAR is, you can calculate that budgeted overhead divided by budgeted direct labor hours. 3 lakh divided by 20,000. So what will it will become? 3 lakh divided by 20,000. Budgeted direct labor hours. Budgeted overhead cost divided by budgeted direct labor hours. What is the amount? Divided by 20,000. What is going to be the amount? 15. So 19,000 into 15 is going to be my absorbed overhead cost. I have to find actual overhead cost, not under over absorption of overheads. It is given. Under absorption of overhead is 35,000. Okay, under absorption is 35,000. What does it mean? It means that absorbed overhead cost is less than the actual overhead cost. It is under absorbed by 35,000. So what is the amount of absorbed overhead cost? Actual hours 19,000 into 15. Let me calculate it. That is 2,85,000. Now 2,85,000 and actual overhead cost, as it is under absorbed, so it means that actual overhead costs are higher than absorbed overhead cost by 35,000. So the actual overhead cost is going to be 3,20,000. 35,000 plus 2,85,000. Let's see. 3,20,000. C is the answer. A business prepared its statement of profit and loss for its first year of trading. It uses marginal cost to value the inventory. The finance director wants to prepare the statement using absorption costing. Well, currently, we are using marginal costing, but now we want to opt for absorption costing. What will be the effect on inventory valuation and profit for the year due to this change? Remember this, that in marginal costing, the inventory includes direct material, direct labor, and only variable overheads. Whereas in absorption costing, we also include fixed overhead cost in the inventory valuation. Because in absorption costing, fixed costs will also be a part of the fixed cost will also be a part of, means marginal costing, we will take only these costs, but in absorption costing, we'll take all these costs. So it means that inventory value under marginal costing will be higher. Why? Because the per unit cost includes the fixed overhead cost. So in absorption costing, per unit cost will be higher than marginal costing. So effect on inventory valuation increase. If we use absorption costing, we need to value the inventory including factory overheads. So the inventory valuation will increase. Profit, because the inventory valuation will increase, so closing inventory will be higher. Cost of sale will be lower and profit will be higher. So increase and increase. So D is the answer. Because of increase in the closing inventory, cost of sale will be lower and profit will be higher. So profit under absorption costing is always higher than profit under marginal costing because of fixed cost element in absorption costing, because of fixed cost element in closing inventory under absorption costing, क्योंकि हम closing inventory में वो भी शामिल करते हैं. Next is 28. The following information was provided about a product. Selling price per unit is given, that is 50. Then variable cost per unit is 26. Total fixed cost 10,000. Demand is 1,800 units. Let's calculate the contribution per first. 50 minus 26. That is going to be 24. Okay. Then if the selling price increases, only demand changes. Matlab, he's of the view that variable cost per unit does not change. But selling price increase, when the selling price increased by $4, profit fell by 1,200. So let's calculate the profit also. The demand is 1,800 currently. So 1,800 multiplied by 24, this is contribution per unit. Let me calculate 1,800 into 24. That is 43,200. Then less fixed cost, it is given. That is going to be 10,000. It will not change, obviously. So the profit under this case is 3,3,200. Now he's saying that profit fell by 1,200. So let's decrease the profit by 1,200 minus. Now profit is now 32,000. Profit is 32,000. But fixed costs, you know that even the selling price will increase or demand will increase or decrease, profit will remain the, fixed cost will remain the same. So total fixed cost will again be 10,000. So the total contribution is now going to be 42,000, right? And he's saying that selling price increased by $4. The selling price was 50 previously. If it increased by 4, it will become 54. Variable cost per unit will not change. So 54 minus 26, which is the variable cost per unit, which will remain the same. Now the contribution per unit is going to be, that is 28. So the contribution per unit now is 28. If the selling price increased by 4 and the profit has fallen by 1200, so profit is now not 33,200, it is 32,000 plus 10,000 fixed cost. 42,000 is the total contribution and the contribution per unit is 28. So I can find now the demand or the unit sold under this case is total contribution 42,000 divided by contribution per unit 28. The current contribution per unit and the current total contribution. So 42,000 divided by 28, that is 1,500 units, right? So the demand will decrease by 300 units. It was 1,800 units. But if the profit fell by 1,200 and selling price will increase by $4, only demand will change. So demand will, what was the decrease in demand? It will be decrease of 300 units. So B is the answer. 300 units will decrease. It was 1,800 first. Now it will become 1,500. It is a difficult question. I have already told you that marginal costing and absorption, marginal costing question especially, it will be little difficult to calculate. There is also another point which is known as high and low point method, and it is given in many MCQs in the past. This question of high and low point method will come in your exam. I'm telling you, high and low point method MCQs will come in your exam. Low point is given, high point is given, change in cost divided by change in units. You will find the variable cost per unit and you multiply it with units to find total variable cost, and then you can find the fixed cost or the whatever the requirement will be given in the question. A manufacturing business provided the following information. Selling price, variable production cost is given, variable selling cost is given, fixed production cost is also given, fixed selling cost is given. What was the contribution to sales ratio? Quite easy. Contribution is going to be selling price minus all variable cost. Sales minus all variable cost means production and variable selling, both, all variable cost, right? Not fixed, neither production nor selling, right? The answer is 30. So the contribution is going to be 30 over sale, that is 80. You will get the contribution to sales ratio into 100. So 30 divided by 80 into 100, that is 37.5%. So C is the answer. C is the answer, 37.5%. Next, which assumption are true about cost volume profit analysis? Remember that all the assumptions which are taken in cost volume profit analysis will also be taken for break-even analysis. All the assumptions which are taken in cost volume profit analysis will be taken in break-even analysis also, right? दोनों में ही आती हैं assumptions जो है, ठीक है? What are the assumptions? I will let you know. Number one, there is fixed. The cost is basically distributed in fixed and variable element. Fixed cost in total will not change. Selling price will not change. Variable cost per unit will not change. Product mix will not change. Units produced and sold are same. Let's see. Costs are classified into fixed, semi-variable and variable. No, semi-variable nahi hoti. Selling price per unit remain constant, right? Total fixed costs remain constant, right? Volume is the only factor affecting variable cost. That is also right. So 2, 3 and 4 is the answer. That which assumptions are true about cost volume profit analysis? Semi-variable cost जो है वो नहीं होती इसके अंदर. Selling price per unit remain constant. Total fixed cost remain constant. Suppose that you don't know fourth point. Suppose you know that 2 and 3 has to be a part of the assumption, either break-even or cost volume profit analysis. 2 and 3 comes in which together? C. So you can assess that way also. Let's C is the answer. 2, 3 and 4. Because variable cost per unit does not change. It means that when volume will change, Total variable cost will change actually. Per unit will remain the same. Okay. So this is done. We are done with the MCQs. Inshallah, I will upload the guests also. And hopefully the exam will not be that difficult. But I still believe that you have to go through the costing MCQs. The easier thing, if you have problem in the costing, just do last seven MCQs of every paper. You will be done with the costing MCQs, all the costing MCQs. Only 7 MCQs of the last every paper. Thank you very much. Any question? Take care. God bless you.